Good morning, traders. Welcome to the 12th. We're going into Thursday of this beautiful week. Make sure to swing on over to ssftg.com and grab your morning brief levels. I've got all those posted for you there. We've got the NASDAQ, the S&P, gold, crude oil, corn, and Bitcoin all ready to rock and roll. Before we jump on in, of course, as always, we need to make sure that we double check the news for today. We don't need to be surprised by anything. So right out of the gates going into Thursday, yesterday was a holiday, so that does mean that a few things may be pushed off, like, as an example, the 11 o'clock crude oil inventories for today. That's not usually the case, but this time around, because yesterday was a holiday, it got pushed to 11. Anyway, looking at earlier this morning, we had the IEA monthly report. At 8:30, a little bit later, we have the core CPI. That's the first batch of large news. The forecast is 0.25% on that. We also have the initial jobless claims. The forecast is 735,000 on that. Previous was 751,000. And then going into the crude oil inventories, the forecast is negative 0.913 million. The previous was negative almost 7.998 million. That's really about it from that side of things. Now, today is Thursday, so we do also have the natural gas reports for today, but those are all happening, around the same time. So, actually, maybe we don't have the natural gas inventories. Oh, interesting. Okay, so no natural gas inventories. I stand corrected. That's really about it. As we go into the afternoon session at 1400, we have the federal budget balances for October, negative 274.5 billion is the forecast. And then we have FOMC member Williams speaking at 1400 as well. So we've got a good amount of news coming out throughout the day, a good chunk of news throughout the majority of the day, actually, and it's kind of spread out pretty nicely. The big news is going to be at 8:30 and then at 11 o'clock. This afternoon won't be huge. Obviously, we still have the election stuff and all the presidential stuff. That whole climate's a mess and the markets are going crazy because of that. So just, keep that in mind. But let's jump in for today. That's going to be Thursday the 12th, 11/12 of 2020. All right, first up, we've got the NASDAQ, and so far the NASDAQ has been seeing a very nice rally to the upside. We did have some shorter-term trend lines that we were breaking out of this big, thick bear line here. We're breaking above that trend line, and if we zoom back a little bit, actually a lot of bit, you can see where that one came from. That's a big one that's been hanging out for a while. So we're breaking through a lot of that resistance, and we do have this new rising support in the form of that kind of sea green sort of continuation leg to the upside. The big thing that stands out here is looking at the overall price action with such a strong move to the highs. If the bears were going to take this back, they should be showing up with a lot more strength than this. This looks simply like we're forming a bit of a pennant and then looking for a continuation breakout from there. Now, it is possible that it breaks down, but with this type of consolidation and the way that it's forming, seeing the sellers barely making any progress, it makes a lot more sense to see this move down be a failure, see this attempted break below that trend line back towards kind of all of this previous structural support. It's all kind of created a bit of a shelf there, looking for continuation back to the upside. Now, the other thing that does stand out, if we zoom out a little bit here, is obviously we did fall off of the highs with some pretty good aggression, right? That was all the way up towards those 12,400s. And with that drop to the downside, we've got to be paying attention to what's going on from there, because longs will have gotten in up there and they will have been stuck for quite a while. So seeing this round off like this so nicely does suggest that buyers have been building in for a while and looking for rotation back up. We'll have to keep an eye on the COT as a side note and see what the COT looks like going into Friday or at least next week and see how that's shifted, because right now it appears as though it's probably going to shift to net long if this keeps going the way that it is. At the moment, bullish continuation to the upside, and realistically, that's kind of the objective here for buyers, is just seeing a bit more continuation. Looking for a trap underneath the lows, then a bounce back up. If it does end up breaking lower, then we're probably going to see some deeper pullbacks towards those 830s. Next up, we're going to be switching gears over to the S&P, and just like always, the S&P looks very similar to the NASDAQ, but there are a few key differences. Again, between the NASDAQ and the S&P, The S&P isn't looking so much like a rounded bottom as much as it was just kind of a quick flush down, found support, and now we're baselining back to the upside again. And if we zoom out, we can see that realistically this market hasn't been doing much. It's just been sort of grinding around, and realistically, if anything, the one major concern that I've got for the S&P is that if this is a range, they tried to break above the highs and failed back to the downside pretty miserably. So if the market comes back up towards this area, that could be a large zone of interest for sellers to try to push back down again. So the NASDAQ was looking like it's trying to take off with a little bit more room to the upside. The S&P has got some issues. Zooming into the near term, obviously the market is still heavily bullish. We just broke out of a nice little wedge formation, and we're seeing a little more continuation to the upside. So it is obvious that buyers are interested here, but realistically, as we start coming in towards these areas of resistance, 35.75, that's when all of that weakness might start catching up to it. So the S&P, at least as far as the indexes are concerned, when compared to like the NASDAQ, the S&P is going to have to be a little bit more careful today. All right, and then switching gears over to the metal side of things with gold. And gold, for the most part, it's going pretty sideways. I mean, obviously, it's had some volatility over the past little bit here, but for the larger continuation movement to the upside, we've got buyers that are trying to get the rally to the upside. They broke down below the channel lows, or at least the wedge, whatever you want to call this green rising support line. Might be a wedge, might be a channel. Either way, they broke through the lows of it, held it as resistance, but failed to make a new low. And that's a big clue, because when they break out, you expect previous support to turn into resistance and hold, which it does, but then you'd expect it to continue, and it didn't. So with that failure to continue in a rotation back up, a lot of sellers might be stuck on the back end, where if it does flush down, that could simply just be sellers getting out at break even, which causes a secondary pop to the upside. Market's relatively neutral so far, and it's not really getting a whole lot of conviction one way or the other, and it does appear to be mostly range bound, with the lows at around 61 or so, and the highs back up towards the 70s. So we've got about that 90 tick range or so where the market's just sort of ping-ponging around. And even beyond that, it's fairly obvious that the range has a pretty well-defined midline as well. So that's kind of what we're dealing with at the moment. Although the overarching context does show that a dip lower might be just sellers getting out of break even, might be a nice swing long area. We don't have that extra proof yet. We are seeing a lot of sell side failures. So as long as this keeps going higher high, higher low, well, that means that the buyers have a reason to keep being buyers. Over on the crude oil side of things, going a little bit sideways here as well. Yesterday was a pretty big day, all things considered, for crude. They had a nice move all the way to the highs of, they almost made it all the way up to 43. Actually, did they? Yeah, a little bit above 43, and then rolled all the way back over towards 41.20, and that's sort of where we've been baselining. The market's not really showing a whole lot of conviction one way or the other. It does look like maybe buyers are trying to find some form of support. Sellers tried to break down through the lows once, tried to break down again and failed, and now we're back up again. A lot of this falling resistance is starting to crack as well, with this nice channel falling to the downside. We've got narrower channels that are trying to fall. All of these are starting to break, and we're beginning to see the starts of bullish formations back up. So we haven't had higher highs, higher lows. We haven't had that transitional stage yet, but it is looking like it's, at the very least, the most the sellers are going to be able to hope for is this going into a range. It's going to be difficult for them to continue the trend, and buyers know that. So if it does dip back down towards the lows, there's probably just going to be buyers waiting there. Keep in mind it is inventory day, so it makes things a little bit weird, but the nice thing is inventories are coming later in the day too. So it helps a bit, I guess. Realistically, though, crude oil is kind of sideways. I think the best hope the sellers have is for this to go range bound. Buyers are just going to be waiting down at the lows. And if it does pop higher, we're still in a range. The anticipation is that sellers will be waiting up there too. The big concern with that, though, is that we're dealing with this larger trend. And with this larger trend, we're seeing a pretty healthy pullback, right? With this gigantic rally to the upside, good continuation, pulling back. It wouldn't be a surprise at all, especially once these falling resistances start breaking, to see it start migrating its way right back up again. Over on the agricultural side of things with corn, and corn, other than the WASDE report that sent this thing as a rocket ship all the way to the highs, it's kind of given that all back and now starting to bounce back higher. So this could just be a retest of that earlier entry point. Buyers going into the WASDE report may not have necessarily wanted to do anything because of how volatile they can be. So they'll be waiting on the sidelines. They have the upside breakout. Now we're back, right? They're back to that zone of interest. And ever since it's been down there, the MACD's been uptrending. The CCI has been uptrending. The RSI has been uptrending. Everything is showing that there's a lot of weakness down here, and it's looking for a potential reversal. It has flat bottomed out rather to kind of break above that falling resistance. So whether or not that's actually a break kind of remains to be seen. It might just be a wider resistance that's sort of waiting back up towards the 420s, and that's certainly not the first time we've heard that number before. That's a big spot for corn. So with this rising support to the upside, we've got a lot of channels that are kind of propping the market up here, and they're still holding. The market's making it above. We're pushing back above previous highs, making higher highs, higher lows. Everything is looking pretty good for a bullish continuation. It's just a matter of what they want to do as it starts getting up towards the pivot point, because that's where all of that resistance in the 420s and everything else started stacking back up, and that could get a little bit messy. And then finally, over on the cryptocurrency side of things with Bitcoin, we had a great breakout to the upside again. Broke above some of this falling resistance. We had a return all the way back up to above 16,000 before quickly pulling back towards 15,600. Obviously, when we zoom out, there's a lot of rising support. There's been rising support for ages, and it's still there, and it's still waiting, and it's still propping the market up. But those are a little bit further back. Where we are right now seems like it's a little bit early, and if the market's going to pull back, it would make more sense to see it dip down into more of those clusters of support. That said, that was a really strong rejection off the lows, and it certainly doesn't have to. We haven't had higher highs, higher lows. We haven't had any type of transitional staging yet. So until then, it's more likely that we go sideways to slightly down until we get back down towards major levels of support. Buyers will be looking to buy this pullback. It is a breakout of falling resistance, but with an overextensive top like that, just kind of blowing through the highs, again, it just makes a lot more sense to see this pull back a bit deeper for buyers down in the 600s, 650s, rather than way up here at the 15,800s.